So that is of interest to me if we want to start trading back lower. I think we also have SMT relative to the all-time highs compared to ES and NQ. So obviously I'm watching this order block right here. So with um, with PM macro, so a lot of times, we'll get to PM macro later. So with FOMC, you have two stages of delivery most times. Between 2 p.m. and 2:30, you'll have one stage, and then PM macro is kind of that sweet spot post FOMC where you can get a lot of trade setups. So if you're new to these high volatility news drivers, there's really no point in trading them. You're gonna get chopped up, and obviously there's slippage worries. So the slippage, like where if you have a stop loss and you're trading right at 2 p.m., sometimes your stop loss won't get tripped, and price will just spool away from you. Like if you were short, sometimes there's a lot of inefficiencies created right at 2 p.m. where it'll just keep running and you have to manually close it, and that can create a lot of drawdown. So it's best to just avoid those kind of trades. For PM macro though, a lot of times you have two entry points. Now this is regular for a normal day or post FOMC. You have an entry right around 315, and then you have an entry around 345-ish as well. So you get kind of two stages of delivery. So if we have a gap that forms like here where you just came up, tap right into it through 15, and then if you displace lower, this is ES. Let me switch back. If we displace lower and we form another gap in the process, then you'd like to see at 345-ish, we run up into that gap, and then we typically after 345, there isn't any entry point that's given after, and you'll see price spool towards their liquidity objectives or imbalance, whatever it may be, after that. We do have a tiny breaker in here, high, low, higher, high. So if you want to take your time fib, drop it on that. There's your entry point. Also do have imbalances lower. So this here, inefficiently delivered, will most likely create kind of a speed bump in the process. So if we displace, you'll see choppy price action around here that's also within discount of the current market maker model if you want to look at this. So within discount, it's your low-hanging fruit objective. That will create bounces. So any inefficient price delivery, I think this is also more than 20 points from the order block as well. Yeah, plenty of room to run there. Yeah, you'll see a bounce most likely off that, back up into our premium PD array, whatever current dealing range is formed, and then we continue to the downside. So watch this order block, how it wants to hold. We also have inversion order blocks in the process. You can see the old selling over here being used. It's kind of a lot of drawings, I apologize. Make this line smaller. So watch this tiny gap. I'm going to screenshot this, send it to predictions chat. So displacing, this is also within discount here. It's already 20 points from the order block. You also have this tiny gap that also probably will do the same thing within discount. So watch a wick may return now. I mean, if you want to go further than this sell side, you have the FOMC gap. So that would be my target. I don't think we'll reach all the way down to this sell side, just because if you look at the higher time frames, if you look at the 15 over here, we have relative equal lows, came and swept it out with this low, so this should be high resistance. Really should not return below here until maybe tomorrow if we want to reverse off the all-time highs. That's one thing, but I don't think today we'll drop another 170 points off of the PM macro. I think this target right here would be still valid. I'm just favoring sell side in this case because it does look like a market maker sell model. 32. Yeah, I wouldn't expect a dip into discount like we just got and then reversal all the way back up. Can also see the old selling over here. So if we fail to put a candle body above this old selling, which we may do it here, but I would also like to see this used as a breakaway gap, preferably. So this is the current target. It's a blue box. Think we can get an entry into the tiny fair value gap. It would be kind of odd for us to come all the way back up here, especially since we're displacing. We have multiple PD arrays that should push price down, so I don't think we return into the breakaway gap. If I'm trading, we'll never take anything short. I'll be able to keep going up. It's definitely difficult to train your mind to enter shorts because it doesn't really make too much sense. You know, if you're used to looking at retail charts or just stocks going up all the time. But I think scalping short is perfectly fine. Or once you feel comfortable with ICT concepts, it's just think of it as a position. And there's the first gap. Reacting off of it. Scary AF after everything that last month and day. Are you talking about a quick run up? Yeah. Oh, there's an alarm. Turn that off. So tapping into here, we could get some displacement through. I do want to see it efficiently trade this. So if he closed below it, expect it to return with a candle body up. And there is the gap. So now watch for a respect off this gap, okay? It could return into maybe premium. Tiny gap there. And then back into sell side. If we just spool all the way through, then expect the last kind of 40 minutes or so to return into the BPR that's made. Good, what, like 20 points, 30 points off yeah, 40 points off the order block already. Been hurt a lot to fade the move like that, just go against the trend. If you're looking at higher time frame, then yeah, I agree. But if you're looking at short-term market structure, I think shorting is fine. If you have a good concept like framework, right? If you're just shorting because it's going up, that's not really a good model at all. If you're trying to catch tops, catch bottoms, that's the last thing you want to do, right? Because turtle soup is kind of the most difficult one to trade. But if you have a 2022 framework, it becomes easier. So I would say if you're struggling with it, to watch the 2022 mentorship because he really outlines that it's possible to get really close to entering short at the top and entering long off the bottom, but with measures taken so it's clean. So displacing all the way through this. If we take out the sell side prior to, so I would actually look at targeting this gap now. I'm gonna say if we take out this sell side prior, then look for a retracement back into this range. But we actually can look at further sell side because we're already reaching down into here and we still have 30 minutes left to go in the day. So I guess watch this lower gap now. I'll send it to predictions chat again. I mean, but you can see it's pretty clean price action. We got terrible price action in the morning, right? Very, very small range. We got high resistance liquidity runs both up and down. But now look how clean price action is here. Displaced lower. And I said, I think it was in predictions chat or something that we needed more data. I was going to start the stream now. I didn't feel like taking longs off PM macro because most times the PM macro, the best way to trade it. Now it's not the best macro I think in the entire session. I think the AM macros are still cleaner and more reliable. But if you're looking at the PM macro, right at 3:15, the question that I ask myself is, who has been the most profitable in the day? Okay, so what liquidity pool has not been ran through and what liquidity pool has kind of been staying there either since the AM session or since lunch and needs to be swept before 4 o'clock. So in this case, obviously we're substantially trading up since 130. So everybody who's gone long off FOMC, and you can see FOMC also didn't have that kind of Judah swing lower. FOMC kind of just ran up and we've been continuously trading upwards. So the algorithm will hunt those stops for offset distribution and just to kind of clear out all the orders. So look for a retracement possibly after receive the sell side into the gap. See, it wasn't efficiently delivered. We don't have clear buying and selling within the gap. We just have kind of selling all the way through. How do you know the reversal is going to happen on the top? A couple different ways. One would be obviously you have to have drawn liquidity that we ran through, but CISD, breaker formations, market structure shift, all different ways you can spot a reversal. But look at the precision up here, right? So I was saying earlier that here's your retracement. Saying earlier that AM session was very rough to read, but now look at the precision here, right? We got old selling, close through. If you've seen previous videos, you know exactly what I'm talking about. But order blocks on the left side, if we're in a very clean market, will be respected on the right side, right? Inversion order blocks. Same thing with gaps on the left side. So once you close below an old selling point like this, you're going to see it respected. So you don't want to see a candle body actually below old selling in a market maker model. So once we close below it, let me remove this LTM high sign. When we close below here, waked up into it, and you can see the candle body staying below the old selling. Then we can find more old selling points. Here's another one. Very, very clean, right? We displaced, put a candle body below, and you can see the candle bodies don't ever return above the old selling. Same thing over here, right? Now the reason that we would not see old selling respect is if we have a retracement leg. So obviously if we dip into discount or something and we're tracing, you'll see it kind of probably ran through back into order blocks or maybe points of interest like a gap that we have to trade back into. But most times the old selling does work. 50% of the FOMC move. Yeah, if we take the entire FOMC move, we just tapped into discount there. So filling this gap, this blue gap with buying now, right? So we should maybe fill all the way up to this end. But I'd like to see efficient delivery up. And if you take the current dealing range, we're in premium, about top in a premium right there. But fill all the way up to the gap, trade back lower. Kind of same exact thing. It's the old selling seen on the higher time frames as well. I'm not sure. I assume it would be since it's fractal, right? Price is fractal, so I would assume all the ideas would work. I see it a lot of times on these lower time frame market maker models. They're very accurate. I don't know if it does. I'm assuming it does work. I would say just backtest it yourself. If you're in a clear market maker model, actually let's go to CL really quick because I know there's a clean one there on the daily. Clean market maker sell model. Let's see. So clear order block range. We have one in here. Old selling. I mean, there's not really a clean kind of order block range in here. Actually, if we go to the weekly, maybe it might be better. Here's old selling in here, right? I'll also use that. It's not like as important to use it on these higher time frames because you're not going to be probably trading daily candles. But higher time frame form of like 15-minute, 5-minute, it should work. Do you kind of have criteria for reversal? There should be a Q&A post. If you go to the Q&A post, I think there's one on reversals and price. Yeah, it's called reversals and price. I'll send you the little tag for it. There you go. So that's kind of the criteria you can look at. But yeah, it's trying to predict reversals is kind of the least of your concerns when you're trying to learn ICT concepts. I would say don't even worry about it as much. If you can confirm reversals, that's more important. Yeah, it's definitely hard trying to predict them, but confirming them with CISD, with breakers, with market structure shift, anything, it'll be easier to trade. But that's why using time is also important. So you see me in the morning talking about 10 a.m. reversals, talking about 940 reversals, all those kind of things in the AM session make it easier to time reversals, but you also have to use price to kind of confirm when a reversal stage. So we came up, filled the premium end of this fair value gap here. Now we'll watch to see how we want to use it. I'm still looking for the sell side. I still think that this sell side should be ran through by end of day. Look at ES, we still are substantially below discount. So look for this swing low on ES as well. Substantially above discount, sorry. Sell side. Could put an alarm over here actually too. So this PM macro, since it's longer, from 315 to 345 is your entry point, you get 2 to 3 different entry points. One around 315 on the dot. Sometimes you can get one around 330, but 315 and 345 is most times where you can get those entries. ES bumped off the old high. Oh, I see. On the daily, I assume. Let's go to ES. Yeah, we're still short of it. Can you please explain where is my mistake? I take the 1 minute YM15 short after close below. We'll wait to see confirm. 15. I'm not too, I don't think I understand your question. 3 p.m. Oh, you shorted it at 3 p.m. in the breaker. Oh, you're saying this is a breaker in here and you shorted off this? Oh, I think that's perfectly fine. I don't think you had any mistake. I mean, if you're gonna use that as a breaker. So this breaker, someone asked earlier, when do you use wicks in order blocks? This is where I would use wicks in order blocks. Okay, we have large, kind of wicks there that will last down closing. I think it's perfectly fine to short off that. Obviously, you got to take partial properly, but and it being YM, it's very difficult to gauge price action. YM is the roughest price action out of the three. What's it called? The three indices. I wouldn't trade YM. So we're trading up, filling the inversion over here. Watch for a fractal market maker sell model over on this side too. Hope we go into premium for this leg for another shorting opportunity. Yeah, let's look. If you want to use this one, we are within premium. What I would like to see a fractal market maker model in here. If we start trading up and we don't see any form of a reversal in this area, so either we consolidate, sweep highs, and then trade back lower, or we just react off of the 5-minute gap premium end. Oh, major high. Yeah, if you want to use the parent dealing range, you could use that too. There's your premium. 744. Yep. So wait for around 340-ish. Okay. That's kind of your 340 to 345 is kind of your last opportunity to enter before we sweep liquidity. But I mean, we got from the order block, we got what? If you want to go here, it's 37. All the way to this gap, 62. 74 points all the way to the low. I'll show a little trade that I took off of it on the micros. There's a screenshot. I was into futures trades. Yeah, exactly. Yeah, I'm already happy with the shorts. Already displaced, what, 70 points. Be honest, find it real difficult to take trade in 1 minute. Can't scalp. I mean, yeah, sometimes you have to just trade on those higher time frames. Even the 5 minute, I think, if you would frame that way, you can only take 2 to 3 trades a week. Which I think, even if you're trading on the 1 minute, you only have to take 2 to 3 trades a week, anyways. Um, but yeah, if you want to trade on the 5 minute, I would say frame trades on higher time frames. Use the 15 minute kind of as market structure. So if you see like a 15 minute sweep of a high, then you drop it on the 5 minute. Use that for an entry point. That's perfect. I see a lot of people on Twitter do that. One thing I'm looking at is we put equal highs on it. Yes, we might revisit. Yeah, I'm still watching these highs too. But yeah, we already got a decent move from the shorts right at the start of the macro. So if we don't reach into the sell side, that's fine. But I mean, I'm still preferring it. Took the same trade. Nice. Yeah, I entered slightly late. I wanted to take more contracts off the bottom. Left that last runner on. Got stopped out on it. Still in profit though. Where will you draw the CISD line before NQ started selling off? All right, let's take a look. So let me remove some of this stuff. Let me clean this chart up. So CISD is your last down closing candle getting respected in the move. So respecting bullish order flow here, right? We have down closing range, respected it. Now we have this move up. So this is actually a hard example to pull a CISD from because we have this kind of consecutive move up here. Now, normally when you're looking at a reversal, CISD is your last candle before the reversal, right? But since we don't have any down closing candles in this range between 3 o'clock and 3:04, if you switch to a higher time frame, this is just going to be one consecutive candle. Look, if I go to a 3 minute, see how it's like one consecutive candle, 4 minute, 5 minute, it's just one candle. Okay, so your CISD line technically, um, I would say would be right around here if you wanted to be conservative about it. So if you draw this as CISD, you can remove this breakaway for the time being. See how we close below it entirely. Okay, so this large down closing candle then confirms this up closing move. And then we wick into it, close below, wick into it, close below, wick into it, perfectly there, close below, wick into it again, and then close below. So that's your CISD line. It's definitely a difficult example to show, but then in the process of us tapping into the CISD, we create another order block, which is the one that I marked out, and that's the one I entered off of on the other screen, and then took that short. Here would be another CISD, right? So right here, last time closing move, and we respect it and accelerate off, but that's also outside of time, so we're not worried about that. Already passed the combine. Nice job. Dope. Wonder if you can maybe do a session or make a PDF about the PM macro, or do you know where I can find this? I do have backtesting data on the PM macro. I don't have a PDF like I do for the AM session. It's not something I studied that much. I think I stopped trading the PM session maybe about, I want to say, around 6 months ago. I don't know the last time I put a PM macro execution video on YouTube. But yeah, we can look at forming something, a PDF around this. But I would say the main things you look at is who has been most profitable. That's number one. Number two would be, is there any session range high or low that has to be taken out? So if we have lunch session, right? So say lunch session high is still available and we've been trading lower in the PM session the entire time, then we see a market structure shift at the bottom like this, right? Your most profitable people would be longs, sorry, would be shorts. Um, and a session range is very important. So between 12 and 1 is your lunch session. So if we have that AM high, that would be natural on liquidity. But most importantly would be your who's been profitable most entire time, and then 315 entry and 345, same thing. would you consider the very last up closing candle to be CISD, the very last one at the peak? We closed below it and wicked at it. Yeah, this would still be CISD. It's just a little difficult to use because technically if we're in a consecutive order block, each candle that we close past will still be used as an order block, if that makes sense. So if we have like this here, so this order block range was used, right? You see how we use this? So if you look at, if we have consecutive candles and that's your order block range, each one that we close above, so see how we have this down closing candle right here at 320 or 250, we close above it, technically this one would be an order block, right? And then as we close above this, that's another order block, this, another order block. But then once we close above the entire range, see this used as kind of like a block, okay? See this used as a block. Let me tap into it like that. So yeah, to answer your question, this last up closing candle here, say we use it, this would also technically be a CISD if you want to be very precise, but that's also difficult to use because I wouldn't use this personally just because we're tapping into a previous order block, so you don't know if we're going to get CISD off the top one, so it's best to just wait till we close a little bit below. I hope that makes sense. But you're right, this would be CISD. So if you were really, really keen to predict a reversal and you saw this kind of tap up and wick lower, then yeah, you could take short off that. I would be very, very, like that's not something I would use. Even if this was the AM session, I would not. I would wait for this displacement lower, and you can see that's technically your market or your mentorship 2022 market structure shift, right? Broke it with displacement, and then we trade back up. Didn't get the fair value gap fill, but that's why order blocks are important. Why'd you stop trading PM session out of curiosity? It's just not as clean as the AM session most times. You can still get PM silver bullets right between 2 p.m. and 3 p.m. You can still get PM macros that are clean. You can still get all these different things, but in terms of precision and in terms of reliability, it's not anywhere close to the AM session, I think. So, you know, there would be some days where it would look super clean and I would take it and then just come and stop me out, and it would happen more times than the AM session. It's just because my entire reading of the PM session is not as accurate as the AM session. So I was like, I'm satisfied with looking at the AM session. I think there's plenty of opportunities within, even if you look at 8:30 to 11, there's plenty of opportunities. So it's not something that I would risk, you know, trading. And it's just like if you get your 20 points or whatever you're looking for in the AM session, what's the point of looking at the PM? And if the AM session is poor, you just skip that day, right? You're not gonna, if the AM session is poor, I'm not gonna go back to the PM session and try and trade it, which is what I used to do. But then, you know, you're all of the discipline, it kind of goes against your rules, at least for me, of trying to trade multiple sessions. That's why I preach um, just focus on one session. I don't think it's good to tape read the entire day. You're gonna, one, get tired of it, and then two, you're gonna lose confidence in your ability to tape read because, especially if you tape read something like this, or even on a normal day, if you go from 9:30 all the way to 4, you're gonna be wrong most times than you're right on any day, right? If you try and use every single PD array, try and read the entire day, every single candle, you're gonna like, it's not gonna make any sense to you. So I would say if you're new to it, just tape read 9:30 to 11 every day, and that's all you really need. I would say that the news during AM session is quicker. Yeah, I agree. I think the AM session is also just more, like it's more volatile most days, especially if we have a large AM news like 10 a.m., something that can bring volatility in the market and clean price action, then you won't see a PM session move at all, right? Like if you look at most of the days, obviously excluding today, but large AM session, we have continuation here, large AM session, smaller PM, large AM session, smaller PM, large AM, smaller PM, large AM, smaller PM. Like we can keep going on, but that's also why you don't want to be trading, right? So if you have a good runner on the AM sessions, you can sometimes get further drawn liquidities, but PM session, the only thing I'd be interested in really is the PM macro, right? Like in here we have that was exactly the example I was giving, right? We had trade back lower, still had lunch high as an opportunity, and then right at 315 this is a 15-minute chart. 315 we start that move up and then sweep it right at close. So PM macro is really the only thing I'd be looking at. And you can see here we have an imbalance that needs to be filled. Run up forward at 315. We'll go back to the current chart. So here's 345. I told you there'd be another entry. we are filling this gap right here. I don't know if the sell side will be drawn anymore. We have to dump off what, like 70 points in the next 15 minutes, which is possible. End of day, so between 3:50 and 4 p.m., a lot of times if we have a clean PM macro, you'll see crazy price action in those last 10 minutes because the algorithm has to quickly get to its target right before 4 p.m. So if we're like 30, 40 points and you don't think we can reach it, a lot of times that macro, that last 10 minutes will surprise you and will spool aggressively towards there. But a lot of people like trading that just because you have a quick run. But if you're wrong, and your stop loss is high, you'll get tripped out on that. So I would assume this 345 entry is potentially long just because we've been trading up aggressively since 330-ish. So look for, I guess, the highs, or at least this gap should be filled for sure. Where's the breakaway here? I don't want to go long off this, but should we just do it on demo? Send it 30 contracts and see what happens. You're going to study the 850 macro. Most likely not, just for the sole purpose of I don't want to wake up earlier. And it's also outside of 9:30 equities open, so you won't have as much volatility. So you'd really have to scalp. All right, someone said yes. All right, let's do let me do this really quick. We'll put 50 contracts on really quick. This is a joke, by the way. Don't take this as a trading signal. All right, there we go. Stop loss below here, and we'll take profit at the high. Oh, what good. It's a good car take profit. Nice Mercedes-Benz take profit. But yeah, I wouldn't. I don't even think I would trade the 850 macro. The only time I think I would look at trading the 850 macro is in days where there's high probability. 8:30. It's not high probability. Sorry, high impact 8:30 news. Okay, so if we're expecting, like I said in the AM session, if we're expecting something like CPI or even just an 8:30, like not non-farm payroll, but some other 8:30 news that brings volatility into the market, which there's a ton of them. Like there's a ton of them. You won't see a Judah swing at 9:30, so that's where you would use the 850 macro. I think there would be enough volatility where you could still scalp and then go into what's it called? Go into 9:30 equities open with some volatility. So like if we look at yesterday, since we had CPI yesterday, we'll take a look at that. Tuesday. Let's look at the 850 macro here. 850 to 910. So I guess we did fill this gap here, right? This is a day where we're not expecting a 9:30 Judas because we already got high impact news at 8:30, and then we do fill it, but you can see it's not really as precise. So I won't be backtesting it. I won't be trading it either. All right, let's look at price now. Lambo car. We're at equilibrium from high to low, so 50-50. Right. Yeah, so you can expect consolidation around 50% of dealing ranges. That's a lot of time where your turtle soup happens too. But that's also where it's when you're at 50-50 of the dealing range, you have equal drawn liquidities. So you don't want to be trading unless you have some sort of higher time frame structure. Oh, there's a stop out. Dang it. Yeah, unless you have higher time frame or previous data that shows why we would expect a turtle soup up here and a clean drawn liquidity, then there's really no point in placing trades around equilibrium. Okay. So if we had something like market maker model and we came already down from here, we're tracing the premium, then you could look at going short. If we took out liquidity in this case, then you can look at going long. Go against you, put 50 more change average, double it. Why should we go for short 50 contracts now? Target the lows. We'll do it. Target the lows down here. Stop loss above the high. So what did I say, right? The last 10 minutes you can get volatility. Right at 350 came that volatility in. And we can still definitely reach into this sell side. Like, it's not impossible. It's only 50-ish points or so. Bounce not from the order block. Yeah, if we get a bounce off this, it'll be tough. I don't know whoever asked for the PM macro PDF. I don't know. Like, I don't have any classifications of when the PM macro would be low probability. Like, I haven't studied enough where I would know off the top of my head. I assume if we get large ranges and we already have liquidity objectives met by 2 or 3 p.m., then that PM macro is kind of just chop up and down. I think ICT also has some Twitter spaces that require the subject. I'm not sure though. We get another fair value gap right here. Bouncing off the order block like you said. Alright, we'll add another 50. But yeah, this is, you can tell. We already got the move over here they were looking for. After that, basically nothing. I would like to say though, we most likely won't have a backtesting session on Saturday. We could do it tomorrow. I'll send a poll out, or we'll have to do it on Sunday, one of the two. We'll try and get it in this week before Monday, but Saturday won't work for me at least. So we'll figure it out as we get closer. We also could do Friday PM session, sometime around there. Can never lose, yeah. When it's obvious short, it's not short. When it's obvious long, it's not long. Yeah. I mean, this is just showcasing why you don't want to trade this, right? Obvious long here, displays through. Obvious short, just back and forth. Oh, we'll just close it down now. I'm sick of this. Let's see the profit. Nice. Just lost 50K. Where's the account history? Oh, there we go. Just a light 45K. Yeah, I should have put 200. Wait, that wasn't a clear short when it shorted, and a clear long when it reversed. Bounced off that previous order block, never disrespected equals short. That's true. I mean, I like to use the fair value gap strategy. So whenever there's a fair value gap, I'll just long it. So if ever I see a fair value gap, it's always a long. Even if it's a sibi, you just go long right in there. That's the pro strat. Alright, we don't gotta watch too much of it. There's nothing expected to happen in the next 4 minutes or so. I don't think ES took out their sell side either. Yeah. Neither did YM. So tomorrow, expect same time trade, same time stream, sorry. 9:40-ish. I don't think we have any news, so hopefully we can get some better price action. Let's take a look. We have 8:30 news. And yellow folder at 10 a.m. Excuse me. So hopefully hopefully something better there. Any trader on EQ's gamble. Yeah, that's true. So, when we get this move like this and we start trading back up into equilibrium, you don't want to be trading around here, like I said. So, if we can frame something where we would expect a turtle soup or expect a bounce at equilibrium, then it's fine to take a trade. But in a day like today, where a lot of volatility, so it's a low probability anyways. But when we're at equilibrium, right, you can basically gauge uh, draw and liquidity equal, right? Sell side equal draw, buy side equal draw. We're right at 50%. There's no real clear indication that we want to move lower or move higher. So this is a reason why you don't want to just be using price action. It's important to incorporate kind of everything that you know. So low probability days, time, all those things are factors. Any reason you think that it wasn't a bisi on NQ? Did it trade too far through it? This one, yeah. If you're talking about this gap that I have marked out, I wanted to see the sell side. So buyers were profitable the entire time. We got the reversal up here, CISD, entered short up on this order block. And I was targeting the sell side. See, the only reason I would see this gap being used is like this, where we came up, filled all the way back to buy side. And then I would preferably look at using that as a short. But then once we started climbing above there into premium again, there wasn't anything I was interested in taking. At Flux, when considering CISD, does the wick of the candle matter? Are you talking about like this wick here? Good night. See you tomorrow, my man. Oh yeah, so this wick, I mean I guess you can technically consider it, but I always draw my order blocks from the candle bodies. It's just kind of out of habit because order blocks that have large wicks like this, see how this order block here, larger wicks than the candle body, this is a low probability order block. The reason this is only used as an order block is because we have consecutive candles, and you see a tap there. So in the case of CISD, I would say the same thing. I would say use the candle body, but obviously if we have something like this where, I guess in short, my answer would be no. But obviously if you drop to a higher time frame or a lower time frame, that entire thing is going to be candle bodies. So I guess you could use it. But just from force of habit of like drawing out order blocks, things like that, I don't consider the wicks too important. What if I had a Lambo if you're long enough to order block? That's true, my man. Should have done it. Need some water. There's your breakaway gap fill. So bounce back and forth between long and short. That's why I just don't like trading PM macro, PM session at all. And there's your market close. PA between 1432 and 1504. Can we consider that consolidation? 1432. 1432 and 1504. Talking about this price action here. I wouldn't consider that consolidation. I think that's expansion since we're holding order blocks. Yeah, and Q at all-time highs, that's something you want to short and hold. That's true. Yeah, there's no point in catching tops up here. No, I see this as expansion. So we're holding order blocks. In consolidation phases, you won't be holding order blocks as much. They'll kind of just be sticking up and down, be high resistance liquidity runs on lower time frames. So like this, we're not really holding any order blocks, right? This consolidation phase in here. I'm just trading up and down. So I guess we'll end it off there. Expect a stream tomorrow morning, Lord willing, at 9:40. Hopefully with some better price action, we can get some AM moves. So until then, stay safe. Have a great rest of your night or day wherever you are. And I will see you guys then. Peace.